All right, guys, what's going on? Happy Friday, everybody. Weekend has begun. It is June 9th, 2023. Recording this video for you guys to recap the week, mostly for our Discord members to watch. We also do this on YouTube as well. So if this is your first time watching these kind of videos on our channel, welcome aboard. Appreciate a like on these videos and also subscribe to the videos if you really appreciate it. Thank you so much. Let's go ahead and get started. Dow closed today up 43 points. Nasdaq closed up 0.16%. The S&P up 0.11%. So a green day. The volatility index, the VIX, up 1.32%. So, kind of muted. You can see the price action on the Nasdaq. We're going to go over that here in a second. So first thing I would say that we should do, let's go ahead and bring up the week in terms of the price action. The stock market. So let's go ahead and just refresh this. This is the CoiFin app. This is like Bloomberg, but for free. I really enjoy it. So I recommend this for anybody who kind of wants a platform but doesn't want to spend exorbitant amount of money. I totally get it. They're very, very expensive. Let's go ahead and expand this chart. This is the four major ETFs: IWM, Nasdaq, S&P, and Dow. You could see that the Nasdaq this week was actually down 0.13%. Red. What a difference from last week, right? Where it just led the way. Small caps rotated in 1.65%. S&P up 0.39% for the week, and the Dow up 0.34%. So again, not a lot of action. The individual names, yes. So you could see really since the beginning of June, small caps up 6.77%, the Dow up 3%, the S&P up 2.65%, and the Nasdaq up about 2%. Mind you, it is only the 9th of the month, so can't really make too much conclusions here. I mean, look, we go by the quarter. Again, April to where we are today. Yes, the Nasdaq's up 10%. That's for the quarter. Nasdaq, S&P is up 4.6, IWM up 4, and the Dow up 1.81. So we could get some continued momentum in terms of the small caps and value. We'll go and chart that together for you guys today. But just wanted to go ahead and go over that. Let's go and start with the broader market. Usually when it comes to Discord on the evenings, I go ahead and put like a little note kind of explaining the market, what I see. This will kind of be it for the day. I don't want to kind of repeat the same thing. So let's kind of look at it in terms of the aggregate, the S&P 500. And you could see really since Monday, not much. We got a breakout above 4309. So again, we're above the 38.2 fib. You could see we're now at the point of August highs. If you guys remember the video I had in the beginning of the year regarding investment club video this year, that was really our target, was the August highs. So we got that in June. I do expect us to go a little higher. It does seem to be a buy the dip market. We do have some stuff coming up. So let's go ahead and chart this beforehand, before the week comes up. So again, we're right here. So if we are looking at, if this is a double top, keep in mind this is a 20% rally off the lows, 35.02. You could see it. That's the October lows. And with that being said, this could be a double top, but I doubt it. And the reason why that is, and there's one big reason I really want to say, and I went ahead and put it on the blog this week. Let's see if I can find it. See if I can find, I know it was a tweet somewhere. Where is it? Okay, let's go ahead and find the tweet. That'll probably be the best bet, because I retweeted it out. I thought I sent it on the blog, so my apologies. But I know I sent it on Instagram, so I don't have a way to look it on Instagram here on the computer. If I can find this here, I wish I would have scrolled sooner. Where is this thing? Sorry guys, I have to look back at this. Okay, you know what I'm going to do? I'm going to find the tweet myself. My apologies. It's from Brian Dietrich. It is his Twitter page, and I want to find this exactly. It's regarding the differences between the analog of 2008 and so on and so forth, where this would be a bear market rally. But there comes to some compelling data to show otherwise. If I can find it now, analyze return, we know that, la da 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 da. Trying to find it, and I did put it on Instagram. That's what sucks, that I had it on Instagram and I can't find the damn tweet. So I'm sorry for the delay on why this is taking so long. There we go. All right, let's do this. Here we go. All right, this is from TweetDeck. Here's the tweet. S&P 500 is just points away from a new bull market. We already broke it. This is 4 days ago, up 20% from October lows. What happens next? 13 times, stocks 20% off the lows, where we are. A year later, higher 12 times. 12 out of 13 times with 17.7% on average. 6 months later, they're up 10% on average. 3 times, they made new lows. 2 times in the tech bubble and once in the financial crisis. That's within 6 months, but in a year. Keep in mind, within a year, 12 out of 13. So the best thing you can think of here in terms of, if we're looking at historical patterns, we're going to go higher. So let's go ahead and talk about that. So we're at 4304. So we're going to do 4304 here, and then we're going to go ahead and actually add up the percentage. So in the next 12 months, 17.7%. 4304, that's 761. 761 plus 4304 is, class, it's 5,000. 5,000, is it 5,000? 43,761, yeah. 5,061. That'll be 5061 on the S&P next year. That'll be over 5,000. That is above all-time highs. And that would be historically accurate if that was on average. That's what we would have on average. In 10 months, in 6 months, we'll be up 10%. How much is that? That's 430. 6 months, 10% from where we are now. Is that what they said? 6 months later, we're up 10% on average. So again, by the end of the year, 430 plus 434 would get us to 30 is 4734. 4734 on the S&P. Where does that get us, guys? 4734 gets us right here in 6 months. By the end of December, historically speaking, on average, we will be at 4739. Now that's nice and dandy. What do we do with that info, right? So what we do is we just have to trade it higher. And for the time being, all dips are to be bought. And the last hurdle we have is next week. I think by next week, we will know if we're going to get to 4734 by the end of the year. And possibly 5,000 in 12 months. That's next June. So what we want is 2 things here. We want confirmation and we want a shot, we want a chance. So the Fed coming up. Let's go ahead and go over that. Let's go ahead and go to Forex Factory. I know I'm kind of droning on and on here, guys. My apologies, but this is extremely important stuff because this may be an opportunity of a lifetime as well for buying. And you're not really buying up here yet anyways. Tuesday, we have CPI. This is the Consumer Price Index. Keep in mind, this is the important stuff. June and July was the high watermark for CPI. So when you have 12 months on aggregate, right, and we take the average and the highest number falls, I talked about this last year, right around June and July, that's it. That's when the Fed, in a sense, is going to have that. It's going to look like deflation, but it's deaccelerated inflation in comparison to a 40-year high. So is inflation low? Not necessarily low, more than it is doing better. It's still not low enough, right? We're not at the 2% target. But look how much it's fallen off. So this is just the expectations, guys. Understand this. This is just the expectations for this, this actual inflation reading. CPI, again, 0.2% month over month with a year over year at 4.1. If you start getting to the 3 handle, that's really it. You're going to get to 4,500 because now there's no more kind of layers to climb. The only thing we need to worry about now, if inflation is at a 3 handle, the Fed will more than likely pause. Now, the question is, the Fed does do the meeting on Wednesday. Is this a live meeting? Or is this going to be wait for the info? So again, it's going to be a lot of moving pieces. We're going to have to be very careful. So Wednesday, we have PPI in the morning, and then we have FOMC. The expectation is 0.25%. Actually, it's not. The expectation is a pause. So we may have a trap here. So, wow, I thought they were actually, the expectation was to not hike, was to hike. We also have retail sales on Thursday, and we also have preliminary University of Michigan consumer sentiment. The meat of the stuff really, guys, is on Tuesday and Wednesday. Retail sales are fine. I think we're going to, we read that all the time, and it doesn't move the way it used to be honest. Really COVID with demand, but not anymore. I mean, we know we have demand, at least for now, as long as people are employed. We did have a tick higher in terms of unemployment claims. So we want to make sure that on Thursday, hate to say it, but we kind of want elevated unemployment claims. The market wants alleviated labor pressure. So if the CPI hits a 3 rating, a 3 handle, excuse me, on a year-over-year basis, and then you have the month-over-month, let's just say at expectations, that's enough juice to get you an ignition into Tuesday. Now, where are we talking about here? 4,400 is your target. Again, you could see this trend line here. I know there's a lot of lines. My apologies, guys. But again, you could see, oh, let me get this a little bit here. Oh, I thought I had it. Let's go to the 4-hour chart. It makes a little more sense. There you go. Trend line, this point to this vertex here, and you could see right around 43.91. So that's more than likely my target moving forward. And for support, it's 41.50, the dotted line. So could you short here? And what level am I looking at to short? It's very difficult to short this market, extremely difficult. As you guys know, I try to short Disney, and that stock chart is terrible. And it's just been a buy the dip market, especially into Nasdaq. So the S&P 500, 4,400 is the target. I think we're going to get a short squeeze next week. Could they pull the rug from under us? I think everyone on planet Earth is expecting a pullback. We need a pullback of some kind, and I think that's kind of the contrarian move. And look at the volatility index for next week. The 20 calls 65,000 in vol. So there is some action. Someone is expecting that we're going to jump to 20. And what did we talk about? We talked about the ball, the volleyball underwater, and then bouncing, right? You can only hold it for so long. So you both have compelling cases. I think I lean a little bit to the bull side because you have so many people trying to call a top. And it still gets to the point that how many bears does it take? What will it take for the bears to say, forget it? What did it take for people in 2020 to throw their hands and say, forget it? 3,500, right? That was pretty much the capitulation point. Have we hit a capitulation point for the bulls? Not yet. That capitulation point to me is 4,500. I think if you break 4,500 this year, I think within the Q3, if you get there, all-time highs is definitely in the cards. And we already did the actual breakdown of what is expected. Yes, I have said it. You stay bullish. There is going to be pullbacks. Means opportunity. That's about it. And if you are a buyer and you don't want to miss a rally in the future, which I think we will, remember, we called this bottom and we called the bottom in 2020 as well. You're looking for dips to buy. So again, you need to welcome every dip with buying opportunities for stocks that you want that may have gotten too hot. Not every dip is created equal. And then you're looking for upside calls. You're just playing momentum. That's really all we can do. We don't want to chase these stocks, at least at this valuation. We want to go ahead and see if we can get some kind of pullback to get a little cheaper. We want a deal, right? We want a deal on stocks, but doesn't mean we can't trade it. Let's go ahead and go over, first, let's go ahead and do the week in terms of signals. So we'll go ahead and start here. Not the best week. I must say, a couple things to say. I do have some risk going into next week, excuse me. So it is a Fed day, but again, I got some risk going on. The team already knows. Metaverse, we hit 35%. Well, actually, we'll start from the top. Palantir, we had the 15 calls. They closed in the money. I didn't hold those, obviously, but how about this? I did hold 1464. So I hit the money. We got as high as 1712. We got 50-something% on that. I held for a bag. personally. So I got 97%. So But it hit deep in the money. You can see the price that we got, 1682. That was around 1682. So I'd even hold for the 1712 mark. So pretty close is where I got out, right with that screenshot. I like Palantir. I think Palantir is still got some room up. Once we break 17, again, guys, we know where this gap fill is. It's all the way up here in the 20s, 23s. So Palantir has been very kind to us. And I think that's definitely something going to be on the radar as long as we hold, again, 1466. Let's go to Meta. Meta hurts. Why? Because we had it last week at 35%, which was right here. So let's go ahead and look at it. The date that we got into Meta. Metaverse, June 1st. June 1st, I believe, was last week. Last Thursday, if memory serves me right. And we bought it for next week, June 9th. 280 calls. We got as high as 35% on the day of in question. I believe it was on Friday that we got up here, and we got 35% at 275 with time, and we just didn't even get a chance. It came back down. We were hovering around the 20s. Again, we had time on our side thinking that we were going to catch it. That's on me. I should have taken that trade right away. When it's in your hands, you take it. I know I haven't sweated 5 points before, and you guys know that, but I didn't even get a chance to get out of 35 at all. I even showed the screenshot of my loss. Yes, you guys see it right here. Sucks, but we had it. We had it, and we just got to be a little more sharp than that. That starts with me. I just thought we were going to get that continued momentum with time. So, with that being said, we'll see. We'll keep Metaverse in our back pocket, and we'll make that up. Boeing next. This one hurts. Why does Boeing hurt? Because we had an epic comeback, and I thought we would get more. I thought we would get that breakout. We got to 220. We got in the money, thinking that we were getting that breakout, and we just pulled back today. Left the chips in there, and it didn't work out. It happens. This was the same situation that we had on Tesla last week. I got nervous with. We got nervous with you guys. We said, "Hey guys, let's just close it." This was here. We had the 220s. And we said right around here, oh, well, we have some moving average here. We got in, I believe, last week. Let me see if I can find that. Let's see, June 23rd. Last week, we got in May 31st. Yep, June 19th. And we got out for 20. Went as high as 1,263%, the 220s. And we could see where we got out. We got out right here. We could have gotten all the way up here. Because we closed early and we didn't trust our analysis, we missed out. Now, again, I held personally, I got 160%. I even showed you guys. So it's not like we didn't have Tesla exposure. We did. I remember this during a master class, they were asking me, do you still have it? And I said, yeah, I still have it. Had 2 contracts, the 220s, and I closed them for 162%. God knows where I would be with those now. I mean, I would have probably been, what, 1,200%? Yeah. So you got to live with it. And that sucks. I mean, it just happens. Let me go ahead and close it out. So if we would have held Tesla, we would have made 13 bags. And if we would have closed Boeing, we would have just saved ourselves 20%. It's just one of those things that just ebb and flow. It just didn't work out for us. We'll make it up next time. That's all we can do on those. So 2 losses, 1 win this week. I don't feel great about it. But again, we are going to make that up. That's for sure. And it's kind of the spurts that we have. You know, if you look at our year-to-date numbers here, let me see year-to-date. And you could see based on our history, you know, we'll get 1 or 2 losses here and there, but then we get some momentum. You know, 1 or 2, we get some momentum. I think we had 3 in a row at one point back in March. Then we hit like 6 in a row, 2 in a row. So it's kind of one of those things that's just spurts where you just got to be ready for the next thing, and you just get hot. And I thought Boeing would get that to us today, and we just didn't get it. So that sucks. We also have some risk open. Again, AMD I have. Again, I'm just looking to retest that trend line. We're looking for 128. Again, I'm still looking for the Nasdaq to give me a little room. We played some futures this week. We actually had a great futures week. We bought the dip at 14.4. We went ahead and got in at 15.5. We got as high as 14.683. We made an aggregate of like 162 futures points on Nasdaq. Where's the futures? 135. I'm sorry, 135 points. We made 75. I could have got a little more. And then we lost 100 on Wednesday with the flush. I was trying to play that dip. Didn't happen. Thursday, I played the dip. We played the dip, excuse me, and then we got 100 points. So made back the 100 points from yesterday and still got that 60 from Monday. You go ahead and throw this 75 today. So futures has been definitely working out, sans that one trade. on Wednesday. But again, it's one of those things, you just make it up and you just got to keep going. When it looks at here on Nasdaq, again, that yellow line is going to be our key level of support, at least for the time being moving forward. If anything breaks below that, then we're going to start looking at that fib. So again, we're pretty much holding what, 14.5, we'll call it, and then around 14.367. So if the Fed makes us fall, 14.367 will be your support level 1, and then you have big support around 14.2. And 14.2 is probably the biggest level out there in terms of the Nasdaq, because if that breaks, then we're going to definitely start retesting some levels, and I'm ready to short. So again, anything that happens, we need to be prepared. I think we go higher, but again, if we tank, we need to be ready, because look at put call ratios. They are extremely depressed. The volatility index is at 13. So we need to make sure that we're prepared for any of these moves. So we're going to make sure that if we break 14.367, we're going to keep an eye for this break of 14.247. And if that does break, guys, at minimum, you're going to 14,000, which is a completely healthy retrace of a breakout. We retraced the breakout over here, and then we went ahead and retested this again and came back up. Now, if we continue for more upside, we need to get to 13.7. And after 13.7, what's next? 13.7 on the Nasdaq keeps us going to right around that 15,284 level. That's your 23.6 fib. If you're trading QQQ at home, I said this on the radio today. The radio is a voice chat that I have for Masterclass. And I was talking about how we were long Nasdaq and we were using 353.27 as our support. And same deal. We're going to kind of use that level as well. And there is a gap to fill. So there is a gap to fill here at 359. So I expect 360 next week with a short squeeze, since everyone is thinking short. And that's what everyone was thinking back in October. We're getting more people trying to call a top than we are people saying that the stock market is bullish. There is no euphoria yet. You're not seeing that yet. You're seeing some of it. You're seeing a lot of people closing their positions. This is a short squeeze still. You're not getting a ton of inflows of new money as of yet. So you're really just going back and forth between traders trying to catch the rotation as quick as you can. And we got that about a couple of times. So again, I expect us to continue to go higher. I liked adding some tech exposure today. Netflix and AMD, great charts. I posted that on Discord. I think Caterpillar has more room to run too. Again, we'll break 236.49. We'll fill that gap as well on the daily, right around, what was it right here? 241.12. And remember, that hit 20% when we opened. So got to stay a little patient. Not the best week we've ever had, obviously, but we already know the drill. We're going to make that back. And for anyone that got Tesla on that trade, I went ahead and put it on their watch list and charts. Guys, these kind of notes that I'm going to give you guys, again, I didn't want to go ahead and load the boat, and that's my fault. I should have not hesitated. I like the trade. I even said, take a look here. Let's see. Tesla breaking out of that wedge. We have a target of 261.73 on the gap fill. I even tweeted that as well. I even said I got my eyes on the 250 calls in the 260s, but they may be a little too far out next week. We are beholden to volatility. But again, I went ahead and said, I like Tesla, but just too much risk on the board. I should have stuck to my guns and sent it. So that's on me. So that's why I am making sure that you guys get what you can get. AMD has a volume build on those 130s. We're going to keep an eye on that trade. It's looking very solid. I still think it looks great. Netflix, again, expensive, but I went ahead and sent that over on the blog. If you take a look at it here on, see, on Netflix. See Netflix. And again, this is the daily chart, and you can see 431. There is a gap to fill right there at 505.93. Now, we don't need to go there, but this was the most compelling part of this chart, was that we're above the 200 weekly MA. We haven't been above there, guys, since what, 2021? That's the last time, and that before that was this big earnings drop. So, you know, Netflix has room to run. Remember, this stock was right down here at 162. It's a name that has been absolutely moving, and it is a high beta. Look at the names that have been moving. And also, I talked about this on the blog, was Carvana. And I talked about SoFi. Maybe some of you got it for 40% or something. I think it did hit 40%. I was tracking them. But again, 932, that's your 100-week moving average. SoFi has been squeezing. And again, we got to flip today, and that's fine. But again, these names have been squeezing. Look at Carvana. We talked about this yesterday. Carvana squeezing. Talked about it on YouTube. 1985 was the break. Carvana ended what? Red today. Here, about 1907. So there's a daily gap to fill, 2477, guys. So there is a lot of action out there. We just got to know where to look. And again, those where the option scans come into play. But really, long story short, I expect us to continue a little more. It is a buy the dip market for the foreseeable future, and we just have to wait on it and see what happens. So we will catch you guys on Monday. We got a big week next week. Let's make it a great trading week. We'll make up for this week into next week, and keep a lock on futures, because futures gives us a little more room to play with when it comes to trading the indices instead of just Qs and SPY and beholden to time decay. So keep it locked on futures. We'll keep it moving. Have a great rest of your weekend, guys, and we will catch you on Monday for the next morning note. Cheers.